All right, what's up, everybody? Welcome to an impact interview for the Mortgage Coach YouTube channel and the Trust Engine channel as well. This is going to be a conversation that I think is going to be extremely relevant to both mortgage advisors and the C-suite. Lots of my content is like pure, how can loan officers win in this market? This is something that I think every mortgage professional and executives at mortgage companies should get value from. I also think it'll be valuable to realtors. Jeremy, is this the first time you've been on the YouTube channel?
I think it is. We did a breakdown of the Housing Wire annual
That's right.
event that I think also
That's right.
streamed on the YouTube channel as well.
Yeah.
But
Yeah, well, it's the
it's
second
great
one.
to be back. Great to be back.
It's good to have you. And guys, Jeremy is someone that I've known for a long time, more than a decade. I first met him when he was legal counsel for an IMB that we were bringing on as a mortgage coach client. And he was not your typical attorney. He was truly an innovator. And he left that role and went to work at Rocket, where he came in as a legal professional as part of the council, but he really evolved his career there to where he was a real influencer at Rocket in terms of product, the types of mortgage products they were creating. Didn't your title have the word innovation in it? I want to say like director of innovation.
Senior director of strategy and innovation within, and I sat within the capital markets because obviously within the independent mortgage company world, that's where those product changes can happen. So my team really focused on the financial products, literally what we're going to talk about today, but building the mortgage, the components of the mortgage, how you look at risk and how you sell it into the secondary market.
Yeah. And then to go on with a little bit about Jeremy, I mean, he is truly an innovator. He is someone that wants to make change, and he's a very purpose-driven innovator. He wants to make change for people. He wants to make America better. He wants to see more underserved Americans get into homeownership younger and faster. He's recently, and honored to have you on the board of First Home IQ. So he's a board member of First Home IQ. Thank you for being part of this mission. Anything you want to say about yourself before we get into the topic and we kind of unpack the next chapter of home affordability?
Well, thank you for saying that. And obviously I'm grateful and humbled to be a part of it. I think that what you're building is incredible. The fact that I can help you and Kristen and the team, really excited about it. I mean, my passion for innovation just came from the relentless pursuit that I saw within our industry to be better. I really got attracted to that within mortgage companies, especially independent mortgage banks. When I was at Rocket, it was really amazing to be able to move into that role, work closely with big banks, the GSEs, on how we should think about homeownership, how we should think about the mortgage. And since then, I've been able to get into the startup world, build businesses, really understand what it takes to raise money and bring product to market. Now, I have a great role as a consultant and advisor where I get to come in to founders, entrepreneurs, and CEOs. And some of the biggest questions I get, Dave, is how to get it into the ecosystem, into the infrastructure of our industry. So, your audience is one of the best groups for here's how I would use this. I know how to use this. I want more tools. I want more products to be able to help more people. And then I get to see all of the folks working at startups, growth companies, or even at established companies to make that possible, because it is highly complicated. And you talk to people who have fantastic ideas, and then they run up against regulatory barriers. They run up against some of the legal barriers to just getting anything into this industry. And that's where, I come in and try to make sure that Fannie and Freddie know about new ideas, what's going on, so that they have the best information about the market, and then helping companies take those ideas from, the whiteboard to being in their business and producing revenue as quickly as possible. So for me, it's been a phenomenal experience to be able to see both, the game played at the Rocket Mortgage level, one of the biggest levels in the industry, as well as get down in it with the entrepreneurs who are putting everything on the line, putting their livelihood on the line, their reputations on the line to build something new and cool. And to be able to see it at both ends has been, a real joy.
You are truly a value to the industry, and for anyone that you're consulting with, I know you're helping do great things. So as you and I were prepping for this call, we thought it'd be fun to just talk about innovation around home affordability.
Mhm.
And then we landed on the headline. So if you're watching this, you came here to hear about the next chapter of home affordability. So why don't we just start talking about that? Like, well, first of all, how do you see affordability? Like, I know I describe it as it's not what it was when I was 20. I bought my first house in my early 20s. I think I was 24. I've been 25. But it's a lot harder now for someone in their early 20s to buy a home. How do you describe affordability? And I think affordability crisis might be,
I
in
think
order.
crisis, yep, I think
It's
crisis
not
is the right
exaggerating.
word.
And
No,
then
it's
what
not
is,
exaggerating. One of the biggest examples of the crisis is the lack of starter homes that are available. You just mentioned buying your first home. That first home is such a big milestone and such a big moment to move from renting to acquiring equity, starting to earn equity in something. Ownership, no doubt, is the fundamental transformation. So ownership of anything, by the way, is a fundamental transformation of anybody's financial life. Ownership of home equity is the easiest, usually the easiest way to do that. And that's why home ownership was the American dream for so long. I've been saying recently, there are no starter homes left. I was working with Rob and Robbie Chrisman to write basically the obituary for the starter home. Like it's gone. And so what are we going to do about that? How are we going to address it? Obviously, you hear people at the federal level,
put
the
a little
national
more
level.
meat on the bones on that, though. When you say the starter home's gone, like
So when
how do you
yeah,
define starter home?
so when you look at the median income as well as household income for wage earners, the property values in America in almost every single market have so exceeded income gains that our incomes have continued to rise, but not at the same rate that home values have risen. And so as a result, the income bands, when you think about an affordable product that the GSEs would support, it's usually between 80 AMI and 120 AMI. So you're talking about area median income for a particular market, and you make 80% of that, you make exactly that, or you make 20% more than that. Right in that band is what the GSEs say is their starter home kind of
Got it.
affordability loan product. So when we look at that income band and you say, okay, the starter home in Detroit, Michigan, for instance, that's probably an extreme example based on our area median income. But if you make $80,000 a year, if you make $100,000 a year, you're looking for a $320,000, $350,000 home. And what I'm saying is that home doesn't exist. The average home value in America is now over $400,000. And in most markets, that's not even available. And so when we track incomes and we track home values, that starter home is gone. And 5 years ago, we heard a lot about, well, maybe it's going to be townhomes and condos. So you can still own something a little smaller in square footage, perhaps. But what we haven't seen is the price of condos or townhomes come down either. Condos are still as expensive as single family homes. So whether you're looking at square footage, whether you're looking at a single family home or a condo, there is not much or anything in the band that we would say is a true starter home for many, many first-time home buyers. And what we also hear quite a bit is, oh, well, that's a supply problem. We hear there's not much the mortgage industry could do. We just need to build more houses at that price point. Well, we're not doing that. That hasn't happened. So we're going to have to address the fact that we only can control what we can control. And we have ways, which we'll talk about today, to address that. But we're not building houses in that price point. We are building houses at higher price points. That alleviates some of the pressure of the housing crisis, but not enough. And not for the people that we're talking about.
Yeah. And so we're gonna really spend the rest of the call talking about like next chapter and solutions. Like there are ways to achieve the American dream. That it's, and maybe that's moving and living in an area that you don't want to move. That's obviously an option for folks, but we're gonna kind of come up with a list of constructive ideas for you to do that. One of the
That's
things that First Home IQ is working on is what I call a house hack playbook. So something that you could give to a family, because I still believe that parents at large want their kids to achieve the American dream and have home ownership, whether they are homeowners or generational renters. Parents want kids. They want their kids to have that, what homeownership means. And so we're going to talk about solutions. How can parents help? How can teachers help? And then, of course, you guys are watching this, you're mortgage professionals. What can you do to help? What can realtors do to help? So where do you want to go next?
So I think one of the things you just mentioned is really key. If you have parents who owned a home, data tells us you are like 5 times as likely to own a home as someone who did not grow up in a home with a mortgage. That's something that is very instrumental. However, you also mentioned the key word. If a generational renter is raising someone who they want to achieve the homeownership dream, one thing they do have is they have a track record of paying their rent. And one of the things we do a poor job of in the mortgage industry is using rent payments as a proxy for monthly mortgage payments, despite the fact that it's probably one of the best proxies for monthly mortgage payment that we have. If you can see how someone made a reoccurring monthly housing payment month over month, year over year, it's a pretty good indicator of what they're capable of doing from an ability to repay a mortgage. And yet the data sources on rent have been so poor for so long, we've never really been able to document it in a key critical way. So Fannie Mae, Freddie Mac, and FHA took a look at that and said, you know what? A lot of these data aggregators, these payment systems, some people call it fintech, but the brand names that are out there are things like Plaid, Finicity, and FormFree. Those tools have become strong enough now that the mortgage industry believes we can now start tracking rent payments, and we can start using it to help people who otherwise might not have an application that would get an immediate approval. Supplement it with rent payment history, you might get an approval you didn't get before. So the number one thing in the data space that I'm excited about is helping Fannie and Freddie and the Mortgage Bankers Association kind of smooth out some of the operational issues. We can dig into what some of those operational issues are, but rent payment history is now attainable. You get the bank statement in, you get that cash statement from their savings checking account, excuse me. You can see rent payment, you could track rent payment, and the GSEs will let you supplement maybe a mortgage application that was right on the line to bump it into a yes.
Love that. So list some other strategies and things that are in the control of a loan officer or a lender, a specific
so
IMD.
you can ask, so there is that approval's there. You can ask your lender, and we can start to gain some momentum. That's already approved policy with the GSEs. It just takes adoption and traction. The second thing I wanted to talk about was what we're seeing among millennials and likely Gen Z, although it's a much bigger trend among millennial first-time home buyers right now, which is I'd like to buy a house with 2 or 3 other people who I'm not married to, right? Friends. I want to co-own a house. And so I've been renting for 5-10 years. I'm a millennial with means, but my income, as we mentioned earlier, still hasn't quite tracked to where the home prices in my markets. We're thinking of markets, California, Oregon, Washington, obviously, Colorado, Arizona, places where I know I can afford the monthly payment because my rent continues to go up too. If I live in those places, I continue to pay higher and higher rent. If I could just get in the game. And what a lot of the current system tells you from a messaging perspective is work harder and wait longer. Work harder, wait longer. Work harder, wait longer. It's a theme that we're going to try to bust today, but it's a theme that keeps coming up to these people. And one of the things that the GSEs already allow is they already allow up to 4 co-borrowers who are not related. So there is tremendous practical implications you got to be concerned with. How do you work out some of the details with people who, should have an agreement going in that will help make decisions and help manage some of the ownership costs and some of the other considerations. But you can already have 4 millennials buy a house together in each. Now, they're all on the hook for the application, just like any co-applicants, but they get to own equity earlier and they get to earn it more often. So if you're looking for a partner, an originating partner, Nestment is a company that's actually in the market doing this. with lenders, lenders like New American Funding and others. But
Say that name again.
I
What's it called? What's it called?
Nestment. Yep. Nest like bird's nest, and MENT, Nestment is just one example, but it's a good example where you can already do the loans today, and you can talk to people who might be paying higher rent and want to get in the game and start earning equity. You can now do that 2, 3, 4 co-owners of a property. And in those high dollar states, it's really a trend that's growing.
So let's play off of that a little bit, and let's kind of integrate house hacking into that. So I think a mortgage professional with a database, first of all, let's just say you've done 500 loans. Some people have over 1,000, but you've got a lot of people in your database, and you did loans, so they're homeowners. I don't know what the percentage is, but many of them have kids that want to buy homes. One thing that we know for sure is it's harder than ever. And the starter home, as Jeremy said, isn't an option. And so you can bring them ideas like co-owning. Like I have to imagine that a parent would love some information on that. We're seeing a lot of house hacking, where people are buying 3-bedroom house, renting out 2 bedrooms to afford it, or they're buying duplexes and triplexes, which is something I help both my kids do. And my son I guess he was 20, and my daughter was 23 when I helped them each buy units. And then I don't know if you know the data on it, but I mean, a lot of parents are helping their kids buy homes. And I personally think it's strategically wise. Like the idea of work harder, wait longer. Again, the wealth gap in America, the front line of the wealth gap in America is who owns and who rents. So this work harder and wait longer just doesn't add up to me. What are your thoughts on all that?
That's right. And I think what we can tell, so this is where a product that is really attractive to the market from a sales perspective, and all the mortgage pros listening, they know they can sell it. Here's the best part. It also works for the overall system. It works for the secondary market, the regulators as well. Here's why. It's a higher household income as well. So when I think of whether it's a bunch of co-buyers, the way we just mentioned, or what you said, Dave, which is we're seeing household formation change as well. In a lot of communities, generations are living together, right? So I think of the Hispanic community. We've got Hispanic Heritage Month coming up in about another week, where we're going to celebrate Hispanic heritage across the country. If you have household income, you have a safer loan. And so what you can also talk to people at your shop, let's say you're trying to not only do what we talked about which is what's already available, but then craft a campaign around it, or craft an internal or external communication around why these loans are good loans. A lot of times you see more income, see a safer loan. There's a lower DTI, and we're not good at documenting it sometimes. We only document the primary borrower or the co-borrower, but the reality is we're going to get better at that. The data is getting better, and the more we show it's a safer loan, you should get better price as well. And so that's where the secondary market can really help fuel these tools for sales folks.
Yeah, and I do want to remind folks that if you go to firsthomeiq.com, it is a community for Gen Z. It is a community for teachers. It's a community for parents. It's a community for mortgage and real estate professionals that want to help people get into homeownership in their 20s. And so one of the things that we're working on is we have a lot of house hacking strategies. I don't think we have anything around co-owning, but there's a lot of database marketing tools and social media content that if you're a First Home IQ ambassador, that you can, at the end of the day, create awareness around it. Like I don't know if you know the data on it, but most people, I think commonly think that to buy a home, they need 20% down. Like there's a lot of confusion around that. And my guess is that the concept of co-owning is not well known in the marketplace.
Correct. We've made some progress describing the benefits of not putting 20% down. In other words, advertising these possible home ready type products, and advertising the benefits of PMI. But the reality is people still see PMI as an unnecessary cost and default back to the 20% down. And I think you're right. Co-ownership is not something that's intuitive. It's not something we've talked about a lot. I'll talk about down payment for a second. If you think about the gift that you described parents giving, now over half of first-time homebuyers have a gift of some kind in order to be able
So
to
that's
achieve.
data. Over half first-time home buyers have a gift.
Yeah. And I should get the exact number because I think it's more like 65% last year, but it is over half of first-time home buyers get a gift. And many of the people we're talking about that I have a passion for helping don't have the ability to get a gift. So what do? And so we are defaulting, especially under Fannie Freddie Guide, we are defaulting to benefiting people who can get a gift, but that money gets driven directly into the house. It doesn't go away because you have an equity position, but it's not liquid, it's not usable, it doesn't do anything other than gain entry to the house. So one of the concepts that's the extension of co-ownership, another step that I've been really excited about is, and it's non-agency product for now, we're working on the agencies to adopt it, but you can actually do a non-agency product with an equity share, equity appreciation slice. So somebody without a gift, without the parents that have given them $50,000, $70,000, $100,000 to get into a house, can actually find a co-investor. So this marketplace is being created. Crib Equity is the name of the marketplace that I tend to work with, but that's just for anybody who wants to do some more research or reach out to them. But this would find investors who want home price appreciation. I want 10%, I want 20% share in the home. Therefore, the borrower only has to come up with a mortgage for 80% of the home. And so their down payment is less, their monthly payment is less. They've now avoided PMI. So imagine telling someone, not only can I help you with your cash you need for a down payment, I'm going to get you a lower monthly payment too. Now, at the end of the day, your amortization schedule will be for 80% of the house. But I want to go back to our theme from the beginning. I need to get in the game and start earning equity earlier to be able to then transfer that to my next house and my next house. So what I believe is that by getting in the game with a shared equity, shared appreciation type partner, I can now accrue equity 5 years earlier, 7 years earlier than if I had waited. We saw some data, Dave, where people who had down payment 2 years ago waited to buy a house because of the interest rate, right? The interest rate was 7.5, 8. I have a down payment. I want to buy, but I'm going to wait for rates to come down. People are telling me they're going to come down in the next 2 years. If you waited to today, maybe you get a lower rate, 6, 6.5, maybe it even goes to 5.5 in some places in the next week or two. But guess what? You had 20 to 25% home price appreciation over the last 2 years in many markets. So you lost out because now you can't come into the house in the same position because you got to come out of pocket for a bigger down payment because you waited on rate, you lost out on down payment. So the bottom line is getting in the game, even with a smaller equity position, 80% instead of 100% after 30 years, is still better for most people on both the down payment and the monthly payment. So I'm a big fan of Crib Equity. I think the GSEs will actually end up approving that eventually, but for now it's a non-agency product, but really exciting stuff.
And I'm a big fan of Rob Crane and Down Payment Resources. He's actually a founder friend of First Home IQ and does a lot for that. And I love the way they've built that. The way I describe it, they've democratized down payment assistance programs and created really a pricing engine where a consumer can go to either down payment resources and search for what's eligible in their market. And then they've also licensed that with, I know they've done that with Zillow and with Redfin. What are your thoughts on down payment assistance and how that compares to Crib Equity? And what do you have any thoughts on that platform, Down Payment Resources?
Yeah, anything. I totally agree. So I actually worked to bring that platform into Rocket while I was there for that exact reason you said. So
Rocket has access to
how do I make it easily accessible? And I don't know where it sits in the Rocket ecosystem today. meaning I don't know if it's actually partners within the TPO channel that are using it to serve their customers, or if it's bankers or both, because you can use it as a tool where you're informing your customers of what you found, right? The best thing about Down Payment Resource is it's a tool for both professionals and consumers. You can turn it over directly to consumers, let them search and do their research. You can do the research for them and then serve it up. So it's a great, either way, really great tool. And the thing I like about some of the trends we're seeing in down payment assistance is you can stack them. You can get good. It takes a little more work, but you can get good at finding different sources that all work together. This is not an exclusionary offer, generally speaking. State agencies have it, nonprofits have it, other programs have it. So you can stack down payment assistance, and we're seeing a lot of, community-oriented lenders doing that. So if you can get those, often they're a grant, so that's great. You stay in the house 5 years, you don't have to pay it back. But sometimes they're a second lien and they come with their own interest rate, and then you got to kind of factor that into the blended rate. But I think tools like that are phenomenal, and I think homeowners, potential homeowners who become owners, they need all the help they can get, whether it's crib equity or down payment assistance. These things should all be on the table.
So anyone listening to this, in the show notes down below, we will have links to all these resources. We've mentioned crib equity. You mentioned Nestment.
Yep.
Downpaymentresources.com. Just what they've done, it's a huge value. Like loan officers, you should know about it. Companies, you can have enterprise relationships with it. Because we got to get ahead of this. So we got a few more minutes, but like if we just had to have a checklist of all the things that a loan officer or a lender could do to get ahead of this and really solve to the needs of consumers, what are some other ideas?
I have one more that I wanted to make sure we talked about, which is we talked a lot about credit, what I can pay, the ability to repay. There's also another side to this conversation, which is the house. And I want to talk a little bit about how to help save money on the home, which would make people both appreciate your service, but then also be able to lower their monthly payment, make homeownership more affordable in those first few years, especially, but over the life of the home. And so there's free money out there. There are so many green incentives, green rebates, clean tech rebates, and tax incentives that are being pushed out at both the federal and the state level right now, that you actually can save consumers $1,000, $2,500, in some cases $7,000, $10,000, and even $15,000 by mapping what resources are available, what incentives, what free money is available from the government that may apply to either their new home that they're trying to buy to move into, or their existing home that you just put them in over the last few years. So you mentioned going back to your database. How do I reach back out, whether it's to parents, whether it's to potential home buyers, or how do I work my database with real savings, real tangible programs and money? And we know the cost of home ownership from an operations and maintenance perspective continues to go up. Fuel costs, energy costs go up. We're seeing home insurance costs go up. So there's a tool called IncentiFind. IncentiFind is, as the name suggests, you can search any property address in America. You can see what the available savings are and the programs are in that home. You can apply and capture those savings as a homeowner or property owner. This is a great way to talk to your database, talk to your customers about savings. And like I said, whether it's existing customers that you want to keep in touch with and show them value, or you're talking to your first-time home buyers, first home IQ is a great example of talking about the holistic understanding of what it takes to be a homeowner, both to get ready and then to stay and preserve home equity, preserve home ownership over time. I think these green incentives, these tax rebates are, I call them free money earlier, but one of the things we're seeing is they're underutilized. Last year, half of the incentives went unclaimed because people didn't know about them. So imagine leaving $35 billion of free money on the table. Now that's all buildings, commercial and residential. Commercial buildings, the savings are bigger numbers because those are bigger investments. But a homeowner, we're seeing an average of between $900 and $1,100 saved per homeowner that looks at this data. This could be everything from HVAC, EV chargers, solar panels, air quality, windows, insulation. So a lot of things that your customers are probably looking at today, either considering or have just done, they should go get that free money. And that database helps them do that. But there's also
I,
free resources out there too. Like do the search, do the research. If you use Incentified, great, but it's out there. Rewiring America has a bunch of information on this. There's free money out there for your customers for sure.
I just had an idea that would be fun collaboration for you and I. It could be some type of a special report in First Home
Okay.
IQ and so here's the thought, guys. So the NAR settlement is out, like that has taken place. The changes have been made, and it's really clear that buyers agents need to create more value for folks. They need to be more transparent with their value. They need to get people into a home agreement. So think about it. If you were a buyer's agent in this market and you were looking to be more valuable to consumers, and it would have to be someone who works with a lot of first-time home buyers for this. Well, actually, it wouldn't, because whether you were a buyer's agent that worked with first-time home buyers or you were a buyer's agent that worked with the affluent has kids that they want to have homeownership. What if you had a couple-page document that was laid out well, that was valuable, that I don't know what we call it, getting ahead of home affordability, solving affordability challenges, but you proactively educated your database about all the solutions that we just laid out. Hey, down payment assistance, crib equity, free money from green initiatives. What if there was a playbook that
Mm-hmm.
that mortgage professionals could take to realtors, that together you could take to communities? Do you think you might sell more homes? Do you think you would be creating some obvious value? What are your thoughts on, first of all, I recommend people don't wait for Jeremy and I to create something. Like create something like you could take this call, you could transcribe it, you could throw it into Chat GPT saying, hey, give me a, 1 page, you know, action notes summary, and you could go to work with this. But don't you think mortgage professionals should take this call, go to realtors, and turn this into value and advice? Any thoughts on that?
It's definitely what we're seeing is that you have to have every tool in the toolkit. And what we're trying to do is add more tools to that toolkit, because each and every scenario is getting more complicated given the income and market crisis that we mentioned at the outset. So this just offers you more in the toolkit that you can use to say, hey, we're going to customize a solution for you. We're going to get you in a home. Don't despair. We have all of these options, and some of them are going to fit different for different people. I think the other thing that you brought up, Dave, that I see in the research from a consumer market research perspective, customization and personalization of the experience with their professional, their expert, is one of the highest ranking things we see in the market research. Customers love it when they feel that it's customized or personalized to their situation. And you just described a great way to do it. So I would say the data's there. It's just a matter of executing on those themes.
I love that. So before we go into wrap up mode, is there any other ideas that you wanted to make sure we got covered in this call? Is there anything else you want to make sure we share before I start summarizing things and, wrapping a bow around this awesome conversation?
Well, I think one of the big things to keep an eye on is I heard some data recently, and I'll just pose this as like a challenge to us in a positive way, in a good way, but some data to say that discretionary spending among millennials and Gen Z has gone up. And the belief is, in part, it could be them giving up on homeownership. And so one of the things that, we can, in this moment of post-NAR settlement with our referral partners like buyer's agents, I think it's time to double down on home equity as the American dream. I think it's time to double down on ownership is the American dream, and home equity remains the most popular way to obtain that. And instead of kind of seeding or giving away that to real estate agents and letting them handle that, I think we can too. So that's the only thing I would end on is, the data says there could be a response to the crisis that says, I won't even shop. I won't even look. I'll just go spend my money over here because I'm going to have to come up with another solution. And I just don't believe that's true. So finding these flexible solutions, finding these customized solutions also helps us just drive more of the trends we want to drive over time.
Yeah, well, Trust Engine, we are dedicated to helping you not just help people get a loan, but get a loan, manage that loan over the course of a lifetime so the family can achieve financial freedom with that. First Home IQ, the tagline is own your future. We believe that that is the wealth gap. That's the front line of the wealth gap in America, is helping people get into home ownership. And whether it's someone in their 20s that comes from a family with means that can help them with the down payment or use equity, or someone who doesn't have means through education. So guys, make sure you lean in to First Home IQ. Jeremy is incredible on LinkedIn. There's a lot of busyness on social media. Following this guy on LinkedIn is business. Like he's just always bringing value. So I can't recommend enough that you follow Jeremy on LinkedIn. There'll be a link down below. I'm a really big fan of yours, and I love it when I hear that you're consulting a lender. I just know that they're going to do better things that are part of my purpose. How do you help IMBs? Because there's going to be lots of loan officers watching this, but there will be some head of production, some C-suite leaders. How are you consulting and helping lenders in the marketplace right now?
Thank you for giving me the opportunity, Dave. I really appreciate that. It's been great working together. And one of the things that I try to do is, whether it's turning on a new product, building a new product, turning on a new partnership, or getting something that you need approved, I tend to help with, I'll give you a couple examples, but one would be renovation loans. So somebody comes to me and says, hey, you built the renovation loan product that Rocket has. I want to go to Fannie and Freddie and do renovation loans. What do I need to know? What do I need to do? You got to select software. You got to have a channel. You got to work on these different things. And then within renovation loans, the green energy gets you even more savings. They'll dump $500, $1,000 from the GSEs in credit to do the green version of the renovation loan. So you don't have to necessarily know you're going to do it. Sometimes I just help people decide whether they should do it and what the costs are of building out something like that. Another thing might be partnerships around community, driving leads within the community. How are you thinking about what partnerships, whether those are the communities that have been historically overlooked, historically disadvantaged communities? How are you thinking about either fintech partners, real estate partners, title partners, and what can we be doing to drive partnerships for IMBs that bring in more leads? And then lastly, there's a lot of buzz that I help lenders with. Hey, what's your take on this? Can you advise us on the NAR settlement? Can you train loan officers in my branches on what they should be saying? Could we build that playbook you mentioned on how to talk to buyers agents about what the mortgage industry thinks, or how we need to see a contract come in? There's a couple of other things in the new product space that I'm excited about. One of them is manufactured housing. We're not talking supply today, but I'm really excited about the potential of factory built housing and how to finance factory built housing. I think that's a great solution. I'm working on that with a client in Detroit. And then thinking through what a digital strategy might look like going forward. So all of this is about experience, and how does the customer, and maybe the customers, your loan officers, if you're talking to a member of the C-suite, maybe your customer is the consumer. How do you think about the digital experience and taking our, in some cases, clunky technology, but in some cases, rapidly evolving technology? And how do you think about a strategy that builds your digital ecosystem over the next year to be able to meet the expectation of consumers?
What are your favorite ways in which people reach out to you and follow you?
Oh, definitely LinkedIn. I'm glad that you mentioned that. So if you find me on LinkedIn, I always check my messages on there. I can also put, and I can give you my email address. So that's a good way to find me.
What is it real quick? What is it?
Jeremy D. Potter @gmail.com. Just reach right out to me. Boom. Jeremy D. Potter @gmail.com.
And we'll put that information down below in the show notes with all the links that were mentioned today.
Excellent. Thank you so much. Yeah, I really appreciate it, Dave.
All right, guys. So, lots of value here. There is an affordability crisis in America, and if you are in mortgage, like there's no one better than people who are in the mortgage business to help put a major dent in affordability. And it's through education and empowerment. And then the beauty is it's purpose and profits. You can really address a challenge in America, and you can do more loans. You can help realtors sell more
Absolutely.
homes.
It's good
So it's a
business. It's
purpose
good
and
business. Yeah.
profit with an income and impact initiative.
Mhm.
So please, if you are a leader and you care about the community that you serve, and remember, your database is a community that you serve. Help your families, regardless of whether they come from lower income, generational renters, or they are very affluent. They want to help their kids get into the homeownership game. So please reach out, check out First Home IQ. Jeremy, thank you for becoming one of the first directors or board of directors. We really appreciate it. I'm looking forward to seeing where that journey goes together. So thank you, brother.
Right on. Thank you, Dave.
All right, everybody. Hey, this is a wrap. If you got value, give it a like, share this with your mortgage friends, share this with your leadership team. Let's make sure they know about Jeremy. And if you are not following savageinsights.com, that is my website where whatever I think this week, the best interview I've done that you need to watch will be towards the top. And whatever interview is coming next will be at the top. And then, of course, we're always taking content like this and creating clips, micro content. So make sure you follow savageinsights.com and also get in the mobile club. I've got a mobile club where I send out a text a couple times a week, sharing whatever I think is the most valuable in the market. Take care, everybody. This is a wrap.